students who start their own companies and become unicorns. I mean, if you track companies like Grey Orange, Razorpay, uh, Postman, the founders did something weird when they were on campus. They had already signaled something out to the community on campus that they are. I think of startups as corporate rebels, like creative destruction or profit rebels who like change the cycle of how money is to be made. So they show some rebellious attitude in college.
Hey everyone, this is Prashant and I'll be your host for the VC10X podcast. And today we have Abhishek Sethi with us. He's a co founder and general partner at Grad Capital. In this episode, we'll talk about the story of how two 24-year-olds started a VC firm, how they source student entrepreneurs and invest in them, why that's a great category to invest in, how they diligence student entrepreneur, and a lot more. So without wasting any time, let's dive straight in. Hey Abhishek, so good to have you on the VC10X podcast. How are you doing?
Hi Prashant, I'm doing good. It's been a normal day in November. Thanks for asking. I hope you're
Yeah,
doing good.
yeah, I'm doing good as well. And I read your story, and it's pretty incredible that you were in IIMA, and then instead of taking the traditional route of getting a high-paying job from there on, because IIMA is the most reputable IIMs in the country, and you get really high-paying offers there. So you chose to get your feet into venture capital and started raising a fund. So can you tell us a bit about that story and why you wanted to do this instead of going the traditional route?
Okay. Very funnily enough, the two colleges I've been into in my life, I chose to not sit for campus placements or companies that visited campus. So it's not the first time that I just withdrew from a traditional route. Uh, at IMA, I was 22 and I had some experience in VC before I joined IMA. So I had some idea of what this industry was and how it operated. And IMA has its own, like it's a very different kind of institution than your typical undergrad college. It's rigorous. There are many case studies. Uh, there are top companies coming on campus, and people are constantly preparing for that. So it's also competitive in that way. Case studies are top notch. Guest lectures are also top notch. So it's an overwhelming place to be in for 2 years. Typically, someone doesn't get some time. I just felt misaligned with my interests, and like it was sort of like a Bavara man, and the mind was chanchal, is what we say in Hindi, which means that it would scatter into places. It would flow like a river without outside boundaries. So I did a lot of other things. I tried starting a VC club on campus. That was my first attempt of doing something new. uh, this happened at the end of first year, where I was trying to set up a club that invests locally within campus students and not just outside. But due to the bureaucracy within the campus, that didn't happen. And I realized that I don't want to interface with bureaucracy. And so what else could I do? And I had put in a lot of effort into that. So I just shifted my frame of reference from starting a club to starting a company. And that changed a lot of things for me, because is one thing that I realized from that is a lot of students spend a lot of time in building a club or an initiative within college. It requires incredible amount of sweat, labor, looping in people, making people motivated, putting in effort day and night without getting too much money, looking for sponsorships for its fest and projects. And I realized that once I shifted the frame of reference, like things became different. Uh, Things became more serious. I had skin in the game. People took me more seriously. So stuff like that happened. Um, and yeah, that's the beginning of Grad Capital.
Yes, it sounds pretty interesting. And talking about the bureaucracy in schools and colleges, and that's always been there, and that's an issue with trying these innovative things out there in colleges. That being said, the fund is still a very student focused, as I've learned. So how are you managing to get that specific deal flow from students and from most likely from these top institutions as well? Are you trying to work directly with the colleges, partnering with them, or is that more directly to the students, connecting directly to the students? And if it's that, then what's the approach? How do you get to them?
So our theory there is twofold. One is that students who start their own companies and become unicorns. I mean, if you track companies like Grey Orange, Razorpay, uh, Postman, the founders did something weird when they were on campus. They had already signaled something out to the community on campus that they are. I think of startups as corporate rebels, like, or like creative destruction or profit rebels who like change the cycle of how money is to be made. So they show some rebellious attitude in college. And if you visit any campus, and if let's say there's a batch of 200, and if you ask 10 people who's the smartest person you know who could be starting a company in the next, who has that kida, who has that chul, the batch ultimately knows the name will emerge, and it becomes a natural choice. Hey, these are the 2 3 people who are likely to make it big. So one is that theory that the look at all the unicorns in India who were student founded, track back their lives, and you'll figure out they signaled something out within campus. Usually we try to replicate that. So we go to campus, we figure out who are the people who are doing some weirdest shit, rebelling against the system, stepping out of the conventional metrics, doing something random. It could be starting a random fund and trading that money out of it, or it could be a satellite club trying to make sure that just putting a satellite in there, or it could be a normal journal club. Uh, but is what we realize that there are some folks on the campus, and the campus typically knows they have signaled it out there. Once that is clear, we what we do is we hire a bunch of associates. These are third year, fourth year students on campuses. Right now we have 17 associates. They get money if the deal they bring closes. So that's in a way you could call it sourcing fee. And they tell us what's happening around their campus and within their friend group. The other way is we also visit campus, and it's a stealth activity. It's not a very announced activity when we go to campus. So you wouldn't know, any founder wouldn't know that we are on the campus. But we talk around, we chat around, we get into the circles and figure out who's doing what. That's a more clever way of, and we can fit in. We are young and our associates are young, and we could fit in those circles and extract information. So this is one primary way of sourcing founders. The second way of sourcing founders is online applications. Like another theory is that there is no capital also has a brand. Every experienced person wants to raise from Sequoia or Axel, and it's because of the brand they have created. And the brand is an outcome of the portfolio, incredible partners, venture advisors, um, stuff like that. For a student institution, for a student startup, there is no um, particular brand that screams, "Hey, we are here to help student startups." And a second theory is that there is a brand gap. There is no clear answer. What is the number one preferred VC if you are a student? You have local incubator, you have local ESL, you have local angel investors, but there's still no clear answer. This is the most prestigious or exclusive institution that we should aspire to get. And there is an inconsistency in answer in all students across India where they have to raise from. So what this means is there's an opportunity to just get online applications if we do our marketing well. That's the second focus.
Right, absolutely. And talking about the first one, because being someone who has tried to get into campuses and give speeches of some sort, because I find that kind of fun. So I found that it's not very easy to like get into these campuses and start interacting with people. You have to kind of have a way in, because
Hmm.
sometimes you just get stuck at the gate, right? So maybe you know someone in the administration, or you know someone maybe who's in the student club at a senior position, then you get in. Then, or is it like you can simply walk in? Is that a way?
Typically, we know someone within that campus, either through our
Hmm.
portfolio or either through our associate. So they let us in. So
Hmm.
it's a message away. A student is message away, and they do some jugaad, put us in guest
Right,
house or something like that.
right,
Other way is going through the admin. Some colleges resist stuff like
right, right.
this is a distraction from placement, stuff like that. And these are one of the best
Exactly.
colleges that have told us this. You don't visit campus, it's a distraction from placement. Entrepreneurship and these projects and these whatever we're doing is distraction from placement. So even that happens, but then we sometimes just call people outside. So every campus also has this like outside adda just after which is like a chai sutta place for them. So we just sit there and figure out from there.
Pretty incredible, amazing. So it's like a very Jugaadu approach, as we say in India. Like you just have a hack around everything. Like if you don't let us in, we are going to get the students out and talk to them, right?
Yeah.
Brilliant. Besides, I saw on the on your website that you have a pretty good reasoning why you're focusing on student startups, especially. Uh, and you said something like there 30% of Indian unicorns are founded by uh,
Hmm.
were founded by, in a way, students. So can you talk me into this thesis, which is very much focused around students, and why this is a good place to invest for LPs?
So that's a very deep question, and I think it's a sociological and historical question more than a business venture capital question. And the sociological question is this: so there is always a status quo that is maintained by some forces around you, and uh, Foucault talks about it. He was a French sociologist and philosopher, and how status quo is maintained and how power is exerted and how people do what they do. There are certain norms around certain things, and it may not be the most rational thing, and uh, sometimes it could be rational, and people apply that lens on religion. People apply that lens. Why do you wear suit for an 8 a.m. interview in your college placement? And there is a justification around it, and those justifications sometimes are exerted to support the norm, and it's not out of rationality. And you'll find this dissonance. Hey, why is this logical? And you will ask someone and they'll justify it in certain way. So how you can think of it, a society has a superstructure to it. A superstructure is a way of doing things and is being supported and protected by some people who are in the positions of power. This could be a CEO of a large company, this could be the government, this could be your parent, it could be anyone. But it has some authority and it is preserving that superstructure for some reason. And it may be an irrational reason. And that superstructure creates the force around you, how things are to be done. Now, if a new person is born in the world, it takes time for them because it's not biological, it's not genetic. So you can't, this knowledge of superstructure is not something you could be born with. So when somebody is born and they grow up till the age of 20, they have to internalize this superstructure. Either they have to internalize it or either they have to fight it. What this means is that students are best positioned to figure out loopholes in the superstructure and ways to figure out new ways of doing things. And the next logical big claim that we make is any big worldly change, any big, doesn't matter in startups, anything that happens around you and is being in a different way would be driven by a student team. It could be technology, it could be how things are written, it could be how music is created. Think of A.R. Rahman. A.R. Rahman was a fresh graduate, by the way, before he got into the music scene. Uh, who's basically a pioneer and did so much radical shit. If you read about his childhood through his religion and his journey, so pick up any frontier of society, business culture, etc., and big radical shift. There's a high probability student team or that young blood was behind it. So that's our fundamental sociological historical theory, and it has a subtle implication in startups. Students don't see how businesses are run, how big businesses are run, and hence have a fresh perspective of doing things, and hence also have the energy to rebel and create a new structure within corporate and how profits need to be earned, and what is customer welfare, what products can be there, can you change products, what technology can do, stuff like that. They can think what you call outside the box. I say is, if you don't have indoctrination, you'll naturally think outside the box. So I don't know if that
Yeah,
theory makes sense, but that's
yeah,
our personal theory why students are going to be big.
right. Yeah, that's an amazing anti-theory in a way to what a lot of people say, that okay, we are not going to back students because they're kind of inexperienced, they don't know how things are done, they don't know how to make money, they don't know how businesses are run. And you have your own theory over there that okay, that's a good thing that they don't know, right? Because they're going to figure it out, and maybe their way of making money
So
is
both
kind of
theories
different.
are positioned differently.
Hmm.
Someone experienced will make the superstructure stronger.
Right,
Someone new and rebellious may want to create a new superstructure. So
right, right.
they both have different roles to play, and there is a
Hmm.
conflict in those roles. But
Yeah,
both roles can make money.
right. Yeah, I love that. Amazing. Besides, I heard this story about uh, initially when you were starting to hire some folks to help you run things at Grad Capital. Uh, uh, you did an initiative wherein you were trying to hire people, but you didn't have the money to hire people, right? So how did you attract people to come work with you without any money?
Okay, so basically the question is hiring without money. It's a difficult. uh, thing, because somebody going full time, and it depends on their context. For example, did they graduate from bits, do they have a job at Amazon, and you're making them quit? In that situation, they better give them an upside, uh, like, because they're going to put as much as sweat as you. By giving them an upside, I mean equal equity, or like almost substantial equity. That's one way, that's a way that I believe in, because building a company is a long game, 10 to 15 to 20 years. So in that stage, you better respect that person, and if you don't respect that person, don't hire them. So if you feel that in the long run their contribution is going to be less and you don't want them to succeed, I think that's bad mentality. I don't want that mentality around me or in my company. So that's the co-founder game, like getting co-founders for you and building the founding team. Give them, I feel, give them substantial equity. If you don't have money in the bank, then you haven't proven yourself anything. You haven't mitigated the one core risk, one basic risk for your company. So it's not like you deserve more equity. Uh, Once money hits the bank, then your ability to pay is low. So then there's a spectrum of ESOP plus money. Uh, then you get to that, and of course, um, sometimes ESOP plus money is not enough for people, and you want to sell a future and dream, and you don't think of this as like lying and being charismatic. I mean, because that can be borderline manipulative. Rather, think of it as uh, creating a objective risk reward profile for them so that they can make the best judgment, because you want long term players with you. They shouldn't feel betrayed. So it shouldn't be like you sold a dream but it didn't happen and then they got betrayed. The initial 1-2 employees or 3-4 people, the initial 5-10 people go a long way with your company and become. We've seen tremendous examples where these people become future fund partners, became future CXOs of a company. So all of these things happen a lot. So I believe in like being absolute, like no selling, like don't sell too much. It's a weird advice, but uh yeah.
Yeah, got it. And I heard another story about you offering a batch of basically you created a mentor group
Hmm.
for founders who would want to get into YC,
Yeah,
student founders, and then you said that if you want to apply to YC, then come work with us, and we have this group of mentors who are going to help you with your application to YC. So how did that play out?
that was our MVP cohort. So we didn't have a fund back then, so we wanted to test,
Okay,
so can we source deals. What is a So two questions we had to answer: can we source deals? uh Second was, can we offer something that's student friendly but it's not money. So the second part was where the YC applications came into it. The first part was how many people will apply and what is the quality of the cohort. So,
right.
so one is the mentor supply thing and the offer product. Can we build a product without money? And the second was, can that product attract quality students? So Zepto was part of that cohort, by the way, where YC mentors helped our cohort. So that and YC, a lot of people who get into YC or raise from Sequoia, or they want to give back and they want to help the next generation get into these programs. Let's think of getting into YC as getting into an IIT. That's how a lot of YC islands describe uh, YC.
Right, right. Yeah, that's true. Uh, Besides, this was your first fund that you recently raised, which is a $1 million fund. So I want to understand how hard was it to raise this fund, and how many LPs did you need to talk to, and what was your pitch to LPs going out without any prior VC experience except that of an analyst?
Yeah, hard is a weird question because I'm not gonna undermine my effort or I'm not gonna over exaggerate my effort. So I'm not gonna talk about it, how hard. But what I will gonna talk about is uh, think of it this way: raising fund, which is a principle we apply even today. Uh, Somebody to give you capital, you have to generate returns on it. One, there is a risk-free return. Then there is a higher return as risk increases. You just have to convince someone in the right risk profile, uh, and show them a path to that risk profile. So that's the abstract financial question you have to answer. For us, it was getting a lot of data, building our own uh, building data point that we can execute stuff. And the first MVP cohort was an example of that. So creating a story and proving that there is a path of having this risk reward structure. Hey, you could make 5x, 10x money in next XYZ years, uh, is what you have to do as a fund manager.
Right, absolutely. And I believe you were already working with a family office, and they said that okay, we are going to be the lead investor in this fund, and then that's where you started and got more LPs in, right?
So I think what helps is for our asset class, which is startups, it helps if someone has been already exposed to startups and they have made money out of it. So all of our LPs from our first fund had an exposure to startups. It wasn't कि steel business ka manufacturing owner is there and he has never invested in startups and he suddenly wants to invest in us. What that needs is selling the startup story also. But we got LPs who already had been exposed to startup and already had the trust in startup as an asset class. So one was a venture capital firm, the other two were family offices. One was a founder who got an exit, uh, and I think 500, 600 million.
Got it. And when we are talking about investing in student startups, it often becomes the scenario that you're mostly investing in students from the elite institutes. Like there are student-focused funds in the US as well. There is alumni ventures, and they have the specific groups for each big college that is there. There is one for UPenn, there is one for Harvard, and they're closely looking at who is coming out of these colleges and looking at who we are going to fund. So are you trying to take more of that approach where you're focused on IITs and IIMs and maybe even BITS, the people coming out of there, and we're going to fund them? Or is it like more broad approach and we don't care what institutes you're coming from, but if you have done something amazing, then we are here to back you?
So roughly 30% of our cohort comes from tier one college. 70% doesn't. So I and we know that there are certain advantages with being tier one. One is it helps you raise capital when you are in dire need. Some angel can save you, some college alumni, stuff like that. You'll find some college alumni in a particular VC firm. So capital wise, it helps. In hiring also, it helps sometimes because then you have a network of also smart people. Intellectual density is higher in your network. So those are two advantages, but that doesn't mean that only they can start. So we have funded other folks also. There's this company Airbound. They're actually dropouts. I don't even know which tier they belong to. But they're building a drone. They were also backed by Peter Thiel's fund, also by Draper's fund. So it's not a necessary, but it helps.
Right. And let's talk about co-investing, because when you're starting out your investing journey, uh, you want to co-invest with the reputable players who are already established in the VC ecosystem. Maybe it can be an angel syndicate that's already reputable, or maybe a VC fund that's already doing good work and already has good deal flow. So if they're investing in a company, then you can co-invest with them and tag along. So are you trying to do that as well, to like co-invest and try to
We're
learn
not
from
here to
them?
co-invest. We are creating a category. That's our focus.
Okay.
And creating a category means we have to do three things in newer way. Our scouting has to be new. So the deals
Mm-hmm.
that we invest in, nobody has to have heard of them. Like no VC in town. So those
Okay.
deals are our best deals.
So you are leading rounds as well, right?
We put our check. After that, whatever they want to do, they can do. But typically, the students or the founders we fund, they have not spoken to any VC in town.
Okay, so it's typically the first check that's going in.
First conversation also with a VC, not just first check.
Amazing, amazing. Besides, since it's the first conversation that they're having with a VC, due diligence becomes really important. And in such an initial stage, it is primarily and very, very focused on the founder himself or herself. So how do you conduct that diligence process? That this is going to be a good bet, because it's always going to be risky when you're so early in the journey.
So think of it this way: it's divided into two parts: ability and code. Ability is what outcomes can you achieve. Is just estimating that this person had the ability to create new hypothesis, test it out quickly, sit with customers, stuff like that. Code is a cultural thing. Like we have a certain bias, and then cultural thing, ethics and integrity also have come into place. We have rejected deals which passed the IC, had great muscle or ability to do stuff, but we rejected them basis code because culturally it didn't fit, or there were ethical issues. We sensed fishy stuff. That's the thing. In ability, we are looking for three things. One is bias to action. Do they create an action plan and execute on it and follow on? And this is, we don't trust words here. The best way to prove is, have you done something before and created a loop out of it, and were you obsessed about it? That's the first thing we're looking for. Second thing we're looking for is, are you like customer obsessed in general? Not saying how big is the market and all, but are you customer obsessed? Whenever you're thinking of a product, do you start customer first or do you start product first? So we love customer first. People we know, eventually every product first person had to start thinking customer first. So we know that's the ultimate place they have to go anyway. The third thing is their ability to attract stuff to them, and it's just a vibe. Can they attract people and capital to them? Because without people and capital, you can't do stuff alone. So can they build a collective out of stuff? These are the three things we look for. We don't particularly look for like business model, what's the market size, what's the ticket size, what's the product market fit, viability, so blah blah. I think these are three things we focus on.
That's great. Uh, and I read on Twitter that you're planning to invest the entire fund in a span of 1 month in 22 companies.
In
So,
1 year.
sorry,
In one
in
year.
1 year.
We have already
Okay.
deployed the 1 million fund.
Okay, it's already deployed, entirely deployed.
Yeah.
So now, are you raising the next fund? Are you already
We
in the
are,
process?
we are under the process.
Great, great, awesome. So, so all these 22 companies are finalized and the money has been deployed already,
Yeah.
right? Okay, amazing. So my last main question to you before we move on to the rapid fire round is that what's your future vision for Grad Capital? What do you see it becoming?
We love students more than the VC job. Uh, so we'll do something with students, something with campuses, something that changes the future. May or may not be startups. It's probably gonna be startups for a long time. For the next 10, 15 years, we'll just focus on funding startups. There are other things that we have thought, but there is no point. And we need to first establish our strength in startups. So there's not much point in dreaming other things. But if I have to, if somebody gives me a magic wand, I have all the resources in the world, I'd initiate like multiple funds for even student labs that could produce AI or next computer vision technology or next robot, etc., which happens just in labs. So we would horizontally expand and deploy capital.
Got it, got it. Amazing vision. Besides, now let's move on to the rapid fire round, wherein I'll ask you 5 questions, which are about the fund. Now, since you have already deployed, you can talk about the next fund that you're raising and about that basically. All right. So, are we ready for it? Right.
Yep.
Yeah. So the first one is, what are the sectors and regions you invest in?
No sectors.
Okay.
If-
Any sector basically,
if-
agnostic.
yeah.
Okay. And regions is India, or are you also going outside India?
Indians can go abroad and come back, build from
Okay.
or for or something. India
Okay.
has to be in the equation.
Got it. What's the typical stage of investment?
Deck, they just have a deck.
Okay. Okay. That's it. Pretty like very initial, like the first conversation basically,
Yeah.
or the first check, right? And what's the typical check size you put in?
$40,000 standard check size, no negotiation. Everyone gets the same $40,000. Yeah, we may change it, but
Okay.
if it's gonna change, it's gonna change for everyone.
Okay. And the dilution is also the same, or does that vary?
That's the same for right now in this point of time, 17th November 22. It's 40K at 5%.
Okay. Amazing. And where can founders pitch you?
Reach out to
Is
our
is
email.
there a direct way on your website or something
I
like
read
that,
all
or is it
emails.
like
I read all emails and I
emails?
read all applications on portal. We don't miss any
Oh,
application.
amazing. I'll make sure to put the links in the show notes. Last one, where can our listeners follow you?
Where can the listeners follow me? Twitter, LinkedIn, Abhishek Sethi 96. Abhishek Sethi
Amazing.
underscore 1996 at LinkedIn.
Sure, sure. I'll make sure to again plug those links in the show notes. Thank you so much for coming on, Abhishek, and all the best with the new fund that you're raising, and all the best with investing in students and building the future of India. Thank you so much for coming on, and happy investing.
Thanks so much, Prashant.